Hello and welcome to this video training. In this video training, I will be explaining you different criteria of the online investment industry in order to create passive income. This training series is especially designed for you guys who are new in the industry, but also I'm hoping to give value to those of you guys who are in the industry already and who are looking for further information or also like to learn a little bit of new pieces here and there. In this video training series, I will be looking at the basics inside of the online investment industry. So the basics is considered like, for example, mindset, your attitude towards success, your priority setting, etc. So basically this foundation, because you are the foundation to your business. So if the foundation is not right, your whole business can't work properly. We also will be looking at risk management in a further video, as well as strategies, ways of earning money, and in the end also how to choose a system for yourself. So in the end of this video training series, I want you to be able to make your due diligence and to make your own decisions. So I want to give you the right knowledge in order to be able to do so. So before we get started with this first video, this video training series is going to be presented by me and myself. I'm Romina Flummi. I will be more than happy if you get in touch with me over Facebook. You can send me a friendship request, you can send me a message, leave me a comment. You can also leave me a thumb up underneath of this video if this video is going to help you or give you any sort of further value. Okay, let's get started. So now we're looking at the preconditions of success. So there's three factors in order to achieve success or to success. The first one is work, the second one is time, and the third one is risk. So I'm going to explain you each and every one of those three factors. So with work, we are talking about the amount of work time, active work time that you are putting inside of your project in order to bring it forward. So we are looking at promotional work, like for example Facebook, for example YouTube videos such as this one here. We're talking about paid traffic, we're talking about organic traffic. We also talk about offline work that you are going to put actively inside of bringing your project forward. Within this industry of online investment, promoting your project or your opportunity is optional, because our money will be working for us, but because we can fast track our results by promoting our opportunities, work and the amount of work time you're putting inside of your business is a factor towards success. Time is different from work. So with time, we are talking about the time that passes in order to make your money produce a certain result. So for example, you invest a certain amount of money inside of one opportunity, and that money takes 10 weeks, for example, in order to achieve or bring you 10% of return, 150% of return. Those 10 weeks are the time that passes in order to achieve a certain result. So these 10 weeks are a factor of success. That's the time that passes by. The third factor of success is risk. So risk is always involved within this industry. So the question is only how much risk are we going to take, and how likely is the worst case going to be happen. So risk is not always a bad thing, because it allows us to achieve a certain increased in profit. For example, being allowed to take a higher risk in order to get a higher return than if we take a safe opportunity, such as most of the financial institutions are, then the amount of risk is a factor towards our success. So if we're looking at those three factors, if one factor is most dominant, the other two factors step in the background. For example, if we have an opportunity that requires a lot of work, and a lot of time, but most work time, then time and risk are mostly not that much in the place. So for example, if we look at opportunities that only make money if we have to put promotional work inside, then most of the time the risk is very, very low, and depending on how much work you put inside, the time can be very short or very long. If we look at the second factor, if we have a lot of time at our hands, if we don't have any sort of time pressure and only let our money work for us, then we are able to take less risk, and also because we don't have any time pressure, we don't have to put a lot of work inside promoting our project. However, if we need, for example, 1 year or more than 1 year in order to achieve our return on investment, then the risk increases because of the time that we need in order to achieve our return on investment. But still, the risk is going to be lower. If we say, okay, we are happy to take a lot of risk, and we are also happy to invest into hypes, which I will explain you in detail into a further video, then we can achieve a lot of profits, a lot of return in a very, very short period of time. But then with a high risk, we basically invest into opportunities that we know are going to crash after a very short period of time. So if you want to choose a project, then normally we want to look into choosing projects that have a balance in all three factors. So for myself, for example, I exclude projects where I have to recruit in order to make money. So projects where I cannot get a passive income straight away. So there are a lot of very, very good opportunities out there that requires us to work, where we can't get any sort of passive income without putting work inside. For a lot of people, those projects do work very, very well. But within this industry, those projects are mostly excluded. I also exclude projects where I have to put a lot of, or where I need more time than 6 months in order to get the return on my investment. So I normally choose projects where my return on investment is achieved between 3 and 6 months, and everything after those 6 months is going to be my profit. So those projects are always into my priority list if you wanted to. I also exclude projects that requires me to take a lot of risk at a time. So for example, if I know it's a hype or a Ponzi scheme or anything like that, those projects are mostly or all the time excluded of my portfolio. So it is important to have a balance of all three factors. Obviously, we can't have 100% balance. There's always a little bit more work required or a little bit more risk required. But in general, we want to look at a nice balance between all factors. Those factors are also very, very important because they will be the foundation towards your goals. Okay, so goal setting in this industry is very, very important, because if you don't have a goal, if you don't know where you want to go, you will never get there. Okay, so we want to set our goals depending on how much work, time, and risk we are happy to invest. Okay, so for example, a realistic goal setting is very important. So you can't come across and say you want to invest €100 or $100, whatever currency you are looking at. You don't want to invest any work inside of the project, and you want to live off the returns, let's say in 4 weeks. This is simply not going to happen. So you either have to take a lot of money in the first place, or a lot of work, or you have to take a lot of risks. You want to have a balance of all factors. So you want to have a realistic goal setting. When it comes to goal setting, we will be talking a little bit further in a future video, but just a little bit for you to have an idea of what we are looking at. So we want to set ourselves a final financial goal. A final financial goal will be the big goal that we are looking at to achieve. For example, you want to earn 5,000 euro or dollar per month. This is your final financial goal. Or you want to earn 10,000 euro a month. Whatever it is, this is going to be your financial goal. This is going to be your main goal. But in order to keep motivating, we want to set as goals along the way. So we don't want to aim too high. This is our final financial goal. But goals along the way are really important. And most importantly, we want to have goals per system. And we want to stick to our goals. So for example, if you have one system that you invest in and you say you want to earn from that particular system 500 euro or dollar a week, and you achieve that goal, start to take your money out and start to invest it in another system. Because we get a lot of people that keep on building and building and building because the system runs so well, and before they take the first dollar out, the system crashes for any particular reason before they even took their return on investment out. So stick to your goals. This is really, really, really important in order to achieve long-term success. It is also important, as I said, to set realistic goals, because realistic goals keeps your business accountable, it keeps you safe, and it also keeps you motivated. The next factor that we are looking at that is a really, really important basic for your success is priority setting. So it is not my job to tell you what to do, but it is a little bit of my mission to give you an idea what sort of priorities you want to look at if you want to achieve success inside of this industry. The first priority that we want to look at is financial management. So I get a lot of people that look into starting a business inside of this industry or in any industry, and they say like, I can't afford the startup investment, or I can't afford to take my initial investment. But in the next run, they go and buy themselves movie tickets or any sort of other luxury articles rather than invest that money inside of their business. So it's really, really important to watch your finances and to make proper choices for yourself and also for your business if you really want to succeed in this business. So especially in the online investment industry, we generally need money in order to make money. You also can put a lot of work into succeeding, but that's only option B. Generally, we need money in order to make money. And even if you don't have that much money at your hands right now, just invest what you have, and then along the way, just add new funds. So you got to be prepared to get to add new funds as you go. So watch your finances as well. The next factor that you want to look at is time management. So time management is really important if you choose to promote a business. So you want to watch what you are doing in your free time. So rather than doing free time activities, obviously you want to have a little bit fun, but most of the time, invest your free time in building your business, because this is what you want to live out from in the future. So rather invest a little bit more time into your business now and enjoy more free time later. And as everything in life, the more you give, the more you get. So the more finances and the more time you invest into your business, the more fun you will have later on with the returns that you get from your business. And if you're struggling with time management or financial management or anything like that, I highly can recommend to read the book Rich Dad Poor Dad by Robert Kiyosaki, which is like priceless when it comes to entrepreneurship. So I really can give you that book in towards your hands. Okay, and next very important factor is flexibility. So if you're looking at the online investment industry, the market is only moving. So I always get people that are doing the same, not only people, not only individuals, also businesses that keep on doing the same thing over and over and over again. They don't learn from their past mistake, and they don't want to evolve with the market. So they are basically like a rock in the marketplace, and then they are wondering why they're suffering along the way. So always make sure, learn from your past mistakes. So for example, if you invest once or twice in a hype because you don't know any better, you can make the owner of the hype responsible for that mistake. But if you keep on investing in hypes without learning from your past mistake, then you need to take the responsibility for yourself because you didn't learn from your past mistakes. And next thing is you have to adjust your strategy with changing market conditions. Okay, as I said, the market is always evolving. A year ago, for example, ref shares have been the thing. Everyone went into ref shares, everyone was promoting ref shares, but now the market has been evolved toward forex trading and also towards cryptocurrency. So make sure if you have a strategy which is most likely to be a more than one income stream strategy, and you find that something that might contribute better to your strategy, be prepared to adjust your strategy and also to change your investment plans. This is really, really, really important when you want to succeed long term in this industry. Another factor that keeps your foundation, which is yourself, your mindset and your attitude, really strong, and also you're changing the strategies and your flexibility, is personal and professional development. So when it comes to personal and professional development, I highly recommend you to read books by successful people. So books basically are a fast track towards your success, because successful people went through all the drama towards the way to success. So learning from their drama, you can prevent going through the same mistakes, the same dramas again, and cut the whole way to achieve success faster. Also, feel free to invest into live seminars. They are not cheap, but they're very, very much worth it. Not only the knowledge that you gain, but also the network that you are gaining. So visit seminars, invest into yourself. You will very much benefit from that. Also videos like this video here. YouTube provides a lot of training videos, educational videos, rather than watching TV, for example. You might want to look into educational YouTube videos. And if you say you don't want to read books because it's not your thing, that is fair enough. Listen to audiobooks. Same knowledge, just that you listen to it rather than reading it. So if you're more the auditory guys, then listen to audios and read books, whatever works for you really. The next thing, if you make your due diligence about a certain program, you want to gather as many information as possible, not only from books, but also from other people, for example, for myself. But what I can highly recommend with that one, always go in the marketplace. If you make your diligence and you gather information, always go with a healthy skepticism out there, because everyone comes with their own reality. So you will find people that are raving about one system, and you will find other people that are spreading negativity about a certain system. If you find people raving about a certain system, they're most likely people that are getting good results from those systems and who are also promoting that system. Okay, so you want to talk to these guys. You also want to look at the negative opinion, but most of the time you will find negative opinion about one system, just to find that in the end of this negative review, they will offer you their system that they're promoting. So always go out with a healthy skepticism. Talk to as many people as you wanted to get a bigger picture, and in the end of the day, make your own decision, because in the end of the day, you have to make your own decision and take responsibility, as every investor has to do. So feel free to make your diligence as long as you need to, until you feel confident about the decision that you are going to make. Another very important thing, especially in the beginning of your business, is patience. It takes money, and it takes also time to achieve success. So when we talk about money, I have a lot of people asking me if it's appropriate to take a loan to start in this industry. This is my personal opinion. Other people might disagree with that, but I normally wouldn't suggest to take a loan in order to start a business, because it is always a risk business. We always want to invest only what we are happy to lose or what we can afford to lose. And I do strongly believe that we cannot afford to lose money that we borrowed or loaned from the bank. So always make sure you invest the money that you actually have in your bank account. As I said, other people might be different with that opinion, but that's my personal opinion when it comes to that question. Now back to patience. So it takes time and it takes money to achieve success. So depending on how much you invest, it takes a lot of time in order to get reasonable results. So in the first place, you will getting like a couple of dollars here and there, nothing to be exciting, nothing to chat about. But if you keep compounding your returns, you take advantage of the compound interest effect, meaning you get profits on your profits. And then after a certain period of time, depending on how much money you invest, it takes a little bit more or a little bit less time, the compound interest effect will give you very, very powerful results that then in the long run you get excited about and you have something to chat about. So in the beginning, don't give up, keep on compounding, keep on sharing your experiences as well so people can follow you. And it takes, as I said, it takes time and money and patience to achieve success in this industry. And as I said, start with compounding to build one system, and then as you achieve your goal for that particular system, take your system out, take your profits out, put it in another system, start compounding there again. So that way you build yourself slowly but steadily multiple income stream, and that's pretty much what we want inside of that industry here. Also, what we want to be patient about is when there are business difficulties out there. So if, for example, if we returns stop due to holidays, if returns stop due to let's say due to losses that a trader makes. So even a trader, it's not a magic person, so there might be losses that a trader needs to to gain back. So there might be patience required from your side as well. That's why we want to have multiple income streams within that industry. Also, what we want to be patient about is if there are a payment provider is a little bit slower, if there are web pages that are getting updated, etc., etc. So as long as we're looking at a real business, all those things can happen. But as long as we keep kept up to date about what's happening, it's all a matter of being patient. And the last point I want to talk about in this video is your mindset. This is another thing that people might agree or might disagree with myself. I normally go in the market case, always assuming the worst case. So that's why I say always invest the money that you are prepared to lose and you can also afford to lose. Okay. The reason why I go always into the marketplace with the worst case in mind, and that doesn't matter how confident I am about a certain opportunity, how much diligence and research I've done, I always go with the worst case mindset inside of the marketplace, because if a system crashes on me, it will not hit me like a rock. It's nothing that is surprise. So I can recover a lot quicker from those losses rather than being frustrated all the time. So always assume that a system can break down, so the worst case doesn't affect you too much. And in the end of the day, within the industry and also within every sort of business, the goal is always to gain more profits than losses. So if we have one loss in one system, we have another system that gains us a little bit more profits. So that's why it's an ongoing process. We always want to have as many income streams as possible so that we can cover our losses when one system breaks down by other systems that we have built up. Okay, this is it for the first video in the series. I hope you got a lot of knowledge out of what I had to say within this video. If this video helped you, just leave me a thumbs up, that would help me a lot, or just add me on Facebook, send me a friendship request, leave me a comment, that would help me very much. And in the next video, I will be talking about risk and risk management and how we can be looking at risk and how to minimize risk. Until then, I wish you all the best and happy investing. Bye bye.